And as we await word from these tech giants, I want to bring in our panel. We got Lance Ulanoff, Mashable's editor-at-large, Scott Martin of Kingsview Asset Management, Fox News contributor Dave Attavilla, Hot Hardware editor-in-chief, and Carol Roth, a former investment banker and entrepreneur. I'm going to go to Lance first because you're the tech expert. Why is it that tech stocks, what are we on the verge of? Are we on the verge of some new technological revolution?
Maybe if you're thinking about AI, everybody's trying to get into artificial intelligence. There's
okay, hold on one second. I asked you, but we have Amazon reporting first quarter results. Let's go to Lori Rothman. Give us the numbers, Lori.
All right, David. So shares are trading higher as a result of these numbers. Let me give them to you. Earnings per share $1.48 versus the expectation of $1.12. So that's obviously better than expected. Revenue also improving, $35.7 billion. The expectation there was 35.3, so a little bit better, about a 23% increase in revenue for Amazon from this time last year. The headlines are still crossing my screen, but I can also tell you that the web services business, that's the cloud computing side, Amazon, tremendous profit earner, has improved. I'll send it back to you and continue to look into this.
Look at those numbers. The stock is up $40 after hours as a result. By the way, kudos to our cameraman, David. He owns 10 shares of Amazon. He bought them at $300 a share. He is doing very well. It's going to take us all to dinner. Melissa.
Yeah, there you go. You're always keeping an eye on his shares. Let's bring in our panel to talk a little bit about this. Scott Martin, let me ask you. So, I mean, that looks like a big beat on earnings per share. The concern with this stock is always how much they spend and aren't able to retain. There's some retention here. What do you think?
There's a little more than some retention, yeah. And I'll tell you what, Melissa, it's funny how this stock goes. It plays games with Wall Street because even on earnings reports where it doesn't beat or loses money, as you mentioned, all it does is recover in the next few weeks anyway. So if you're lucky enough to get out on the last earnings drop, you're to be rewarded. But we own Amazon. We have for a long time because, as Lance kind of talked about prior, this is the technological revolution. Amazon is part of your life today, and it's going to be shaping your life tomorrow. And so I would run, not walk, to pick up some more shares here.
Lance, I mean, everybody always believes in Jeff Bezos as the next miracle man. He continues to reinvent this company. It started out as a books company. He spent a fortune to put the company in the cloud. I remember when he told me that we would be reading books off our, not iPads, because obviously that's not his company, but off our devices. I didn't believe him. That was true. Their AWS, their web services, is enormous. Now he's pouring a ton of money into original content for Prime, and that's the next big gamble. Is that going to pay off, or is there an end for Jeff Bezos' miracles? What do you think?
Yeah, and he's not just pouring money into content. He's reaching out everywhere. Yesterday, they introduced something called Echo Look, which puts a camera inside your bedroom to tell you if you're dressed right. And of course, that's the kind of thing.
That doesn't sound good.
It's only if you talk to it, but that's the kind of thing that ties directly to their retail business where, if they tell you maybe you don't look so good, maybe you buy some more clothes from them.
That's interesting. Let's go to Lori Rothman. Alphabet, parent company of Google, is out with their results. Oh, sorry. Is Ashley giving that to us or Lori? Ashley, go ahead, give that to us.
I'm all over Alphabet, Google, whatever you want to call it. Let's go with the earnings per share coming in at $7.73. The estimate was $7.39. So a beat on the earnings, on the revenue, coming in at $24.75 billion. That, too, is a beat. It's up 22% year over year. The paid click growth up 44%. However, the cost per click, that's your average ad revenue, is down 19%. The stock shot up about 3.5% just when the earnings came out. Now coming back a little bit, but still up 2% after hours, guys.
All right, thank you very much. By the way, cost per click was expected to go down 11%, but look again what has happened. This is 2 for 2 right now. Both Alphabet, Google, and Amazon doing extraordinarily well after hours. Carol, there's a lot that Google is doing now that it didn't used to do. Still gets the vast majority of its money from advertising, but it does a lot of other stuff as well. We're going to be looking closely at that, are we not, as well as investors?
We do look at that. And I think what's interesting about Google is even though they are always investing for the future, they stay true to their core competencies for the most part. It's not a situation like the old Yahoo where you really didn't know what this company was about. Google continues to invest. It continues to have a great brand that is trusted from small businesses to individuals. And they just continue to keep innovating. And if you look at where they're priced versus an Amazon, for example, on a multiple basis, basis, this is a company that you can actually understand their valuation for the future.
It's amazing, though. They're both in the $900 range per share of stock. By the way, we got Starbucks out with second quarter results, their second quarter results. Lori has the numbers there. Go ahead, Lori.
Yeah, it's not as good as many on Wall Street had hoped. The numbers here, 45 cents a share, that's in line in terms of the earnings for the EPS. And let me move on to the revenue. And this looks like a bit of a problem here. $5.3 billion versus a $5.41 billion estimate. Starbucks is also saying it's no longer going to give forward guidance in terms of same store sales. Yeah, so I think that's troubling investors here. They're being bid lower, off about 1 3/4% right now in the extended session. Back to you.
All right, let me go back to my panel. Carol, let me ask you for your reaction to that. I mean, they missed. They're not going to provide forward guidance. They had said that they were going to get back to a historic level of 5% same store sales. We're going to be looking for those numbers, but this doesn't bode well for that.
Well, yeah, and you have Howard Schultz, who just stepped down as the CEO into the executive chairman role. So Starbucks is an interesting one because it obviously has a very full valuation, and they have a lot ahead of them in terms of China. When I did an interview with Howard Schultz last year, we talked about all the infrastructure that he had put into place to make China a huge opportunity, and that potentially could be bigger than the U.S. But on a U.S. basis, they are definitely potentially struggling, and Kevin Johnson, the new CEO, has a very different take. He's got a technology background and a different way that he's going to approach this. So I think that this is one where there is a little bit more risk in terms of that forward story, at least in the near term.
Okay, Microsoft reporting third quarter results. Ashley Webster has those in the newsroom. Ashley.
All right, let's start. Earnings per share coming in at a non-GAAP number of 73 cents. The estimate was 70 cents, so we have a beat on earnings. Revenue, $23.6 billion, right about where it was expected. I want to look at the Azure cloud platform. This is what they call intelligent cloud growth, coming in at $2.18 billion. And LinkedIn, this is the first full quarter that LinkedIn has been a part of Microsoft. They bought it, of course, last year for $26 billion. The revenue from LinkedIn for this quarter, $975 million, which is a little better than the $950 that most analysts have been predicting.
All right, Ashley, thank you for that.
Let's go to Dave from Forbes. Dave, the fact is that they beat on the numbers, but the stock's down about 3%. Why?
You know, I don't really buy into that. I don't understand why the market perhaps isn't reacting accordingly, because what I'm seeing is that Microsoft is firing on all cylinders right now. I think they've been investing in businesses that make sense for the company. I think Azure and the cloud is obviously a big play for them. They're starting to nip at Amazon's heels with AWS. And interestingly, next month, on May 2nd, we have an event coming to New York called Microsoft in Education. We are fully expecting Microsoft to come to the table with a lower cost Surface, mainstream Surface for education, backed up with Office 365 and cloud storage with OneDrive. And I think that's going to give Google Chromebooks in education a run for its money. So a little bit puzzled by
strange.
Well,
we'll see what happens. By the way, I'm going to mention one other thing that it has going for it. It has $113 billion in cash overseas, and even though President Trump may not get all of what he wants in his tax changes, he wants to bring that cash back home. They are number two. Of course, Apple's number one, but they're the second richest company in terms of the cash overseas. They could bring that back.
Not
that would
too
help them a
shabby.
lot. Melissa.
All right, let's go back to Lori Rothman. She's got more on Amazon. What can you tell us?
So what's interesting to me about Amazon, Melissa, is that you've been you collectively critical of this company for its cash burn, spending so much money on expansion, everything from its data centers to its content. Well, as part of the report here today, Amazon is saying that its free cash increased to upwards of $10 billion. So that tells investors, right, the company actually has a little wiggle room, and maybe they're not overspending. And by the way, what they have been spending on, especially with the content, the Academy Award-winning movies, right, I mean, it's paying off. So, yeah, it's a beat. In fact, Amazon just crushing it in terms of profit, $1.48 per share versus $1.12, almost $1 billion in profit, and revenue rose something like 23%. So, real blowout quarter for Amazon. Everybody, shareholders must be pleased.
Yeah. All right, Scott, let me get your reaction to that about the free cash.
I mean, it's music to my ears as a shareholder. I'm not going to lie, Melissa. I'll tell you what's interesting, though. You know, Lance mentioned it. I mean, Amazon is dropping products into your life everywhere you turn. I mean, look at Alexa and the popularity. I mean, I've seen estimates that the amount of Alexas that are going to be in homes in the next several years is going to be close to 100 million of them. I mean, there's tons of product that Amazon, with all the free cash flow they have, that they're going to continue to drop into your life and make part of what your life is. So Amazon is the stock to own, in my opinion, if you're looking at retail, if you're looking at tech, and if you're looking at cloud.
Lance?
Yeah, so you know, it's funny. I was just watching that video with Amazon, and one of the things I noticed is all the robots running around.
Yeah.
They've spent so much money on the infrastructure for fast delivery, and I know that had been a drag on the business for a time, but it seems to have righted itself. Amazon is so well positioned in so many different ways to be pervasive, to be, you know, delivering content, and also be the place where you consume the content. You know, so they're really, you know, and the cycle of looking at stuff. You know, having them looking at you and then buying things through them because they know more about you.
Yeah.
Amazon's also the first ones to really break through inside the home with a digital device that's always ready to hear you. You know, the Amazon Echo and Alexa.
Carol, I agree with all of that. I think all of that is really interesting, and they've been at the forefront of so much technology. I worry about all the spending on original content because no one ever sets out to make a bad movie. No one ever sets out to make a bad series. And picking what is going to be good from a script and backing it with money is a really hard business that isn't one Amazon has been in and doesn't have anything really to do with technology. It's about art and taste. That worries me. Am I crazy?
I think the only reason why you're crazy, and you know, Melissa, I always agree with you, so only maybe a little bit crazy, is that I don't think that content is a big part of the investment thesis behind Amazon. If you look at cloud services, if you look at Internet of Things, if you look at that ecosystem, into the house, artificial intelligence, all of these things that are going to drive technology, Amazon is at the forefront of that, and they're also a leading brand with everybody from teenagers all the way up to small businesses. So they really do have a hold everywhere. I think the amount that they're spending on content is a rounding error in relation to everything else, these bigger tech theses that are really driving the valuation. So that would be the only place that I would perhaps disagree on that.
All right. I like that. Well done.
Google is clearly at the forefront of search, and it is killing it through Alphabet, its parent company. Ashley has some more numbers on it. Go ahead,
Yeah,
Ash.
it's very impressive, David. It's all been driven by a surge in advertising on mobiles and on its popular YouTube video platform, continuing to generate revenue. If you take out ex-TAC, in other words, that revenue that's not shared with anyone else, that revenue coming in at $20.12 billion, that's much better than the $19.8 billion that was estimated. Again, revenue up 22% year over year. Paid click growth up 44%.
Ashley, let me just focus in. What you mean by ex-TAC, they spend money, billions of dollars every quarter to kind of work with companies that help them out to spread the word of Google. It's not a big part of their overall money, but you're saying that's going down even more. So they don't have to spend as much going out and some people might say bribing others to work with them.
Well, they get a slice of the action. If you're a carrier, you know, they will partner with you, Google or Alphabet, in order to access more people out there, and it's working clearly because, especially on the mobile platforms, advertising and YouTube, of course, the advertising revenue is just showing impressive gains.
But Scott, the point is that they're so big, they're so powerful that they don't have to spend as much convincing people to work with them.
No, they don't, David. And that's the beauty, I think, about today's market environment. If you're sitting out there and you're thinking, okay, I've got some cash on the sidelines, and where do I go because the market feels high? I've been saying it all year. You stay with the leaders. You stay with the lead dogs. That's what we've seen today. Amazon, Google, Microsoft, even though maybe it's a little bit down, and then another one in Facebook, David, because these are the leaders. These are the ones that some of those smaller fringe companies are losing their competitiveness with, and they're the ones that are going to lead this market.
But they are
higher.
Changing what they do, and the cost per click is proof of that, Lance. They were expected to lose about 11% of the cost per click. In fact, they're losing 19%, but you still see these enormous gains after hours. So they're kind of moving away from the old cost per click business model, right?
Right. Well, they have to, because that, you know, the value of those clicks is just, it's decreasing. People aren't seeing advertising in the same way, so they have to shift. I'm glad to hear that they're making some gains on the mobile side, but certainly Google wants to be making a lot more money on the cloud side. They'd like to make some money on the hardware side. I really don't have a good sense of how they've done with the Google Pixel phone, which has now been in market for like 6 months or or so. But, you know, they have to diversify. They can't rely on one thing. One of the interesting things to think about on the Google side is the YouTube story. And obviously, they just went through a bad moment with advertisers where there were ads that were showing up next to things that people, like, literally pulled out of YouTube. But we won't realize any of that. We really won't see how that impacted YouTube probably later in the year. But I think it has cost them money. But it's a behemoth. You can't stop YouTube. This is the #1 way that millennials like watch content. They sit there and they just watch YouTube videos. It doesn't matter what's going on in the world.
One leads to another. It's like popcorn. You just can't stop.
Yep.
Now listen.
All right, let's go back to Lori. She's got some more on Amazon. Lori.
So we've talked so much about Amazon and its retail business, but what's so key for Amazon is the cloud business. And this was also very important, just as much a factor in its blowout quarter as really anything else going on with Amazon. Let me give you the stat. 42.7% increase in the cloud services business called Amazon Web Services. The dollar value, $3.66 billion. A staggering amount, really. And if you look at the income, it's $724 million, but on an operating basis, $1 billion even. So the free cash flow, too, is coming. So really firing on all cylinders for Amazon.
All right, good stuff. What do you think about that? Carol, what do you think about that?
Well, I think that a number of the names that we're hearing today are all leaders and are leading in those technologies that are going to be drivers of growth for the next several years. And one of the things that I always look at, I'm not a trader, I'm a long-term investor, and that's how the average investor should be looking at things. So if you think about what is going to be powerful and who's going to be ahead of the pack 3 years from now, I think the names that we're talking about here today, you can see that clear path to where they're still going to have that leadership when it's 3 years from today.
No, it is true. Very interesting. All right, guys, thank you so much. Helping our heroes, President Trump.